Anyone? Absa, Romeo, Ayanda.
See your screen, Joseph.
Why are people muting? We are just four. You can just unmute, so that will be interactive. I don't see the reason for muting, because I know we are just few.
We'll be avoiding
So,
background noise.
I'm not hearing any background noises. Just unmute your mic so that is interactive. I don't want to be talking to myself.
And kunzwa kuna absa kune background noise.
Let me mute my mic. Let me mute my mic.
All right, it's okay. It's okay. So this is a pure introduction to Forex. So if we have been trading, it might not be that helpful, but I know most people have started trading without proper background of what is really trading, what is it all about, what is Forex trading, and so on. So this acts like just an introduction to Forex trading. So by the end of this lecture, another one in the lobby, I think Ayanda is experiencing severe network challenges. We just try to keep admitting him. So this is our objective. It's like a Scott. By the end of this session, you should know what Forex trading is, or what Forex is, because there's a confusion there. You just look at the chart and you are confused, because you don't know what is really happening. But for you, most of you guys, you are doing accounting. So Forex is just a kid of accounting. Then why you should trade, of course, we'll be talking about the benefits of Forex trading. Then who makes up the Forex market? Of course, you'll be interested to know who makes up the Forex market. And then lastly, we are going to talk about when can you trade? Okay, so this is the agenda that we have today. So let's start with what is Forex trading? So if you live in Zimbabwe, of course, you are actually doing Forex trading on a daily basis. When you go to the spot in the street, by trade go there, you have your $10. You want to send someone RTGS, then they're going to say, for your $10, we're going to give you 800 RTGS. Then you're giving RTGS 800. You send the money to your loved one, to your girlfriend. Then, let's say you come just after an hour, you say, okay, now I want $10, my $10 back. Can I give you 800? They will say, no. We don't do that. If you are going to buy the US dollar from us, you are going to buy it at 1.2. So that's crazy, right? Every time I hear that, I get frustrated. I sold my $10 to you for 800, but you are saying I can buy from you for 1.2. What kind of nonsense is that? That one is called spread. There's a bid and ask price. Okay, so the ask will be the 800, the bid will be the 1.2. Then the difference is called spread. So in our Zimbabwean markets, the spread is ridiculous. But you see that if you look at the currency pairs like USD versus ZAR, South African Rand, you see that the bid will be something like 18.5. The ask will be like 17.5. It's not that crazy, In Zimbabwe, it's crazy because that's an abnormal economy. But that's typically, after doing that, you would have participated in a Forex trading, actually. Or sometimes, let's say we say the rate to ask to bid today was 1.2. When you go to the same person in 2 weeks' time, you actually see that the The rate now maybe is now 1.5 or 1.6. That's one is fluctuation. Of course, Zimbabwe is crazy. It's not in a ideal situation of forex forex trading, but that's what is happening. So we have this example on the screen. You are saying you've traveled to another country. You usually had to find currency exchange. Both that one, the smart lane in that other country at the airport, and then exchange the money you have in your wallet or purse. So let's say you travel to Japan, you have your $100, and they'll tell you that for just $1 American dollar, they are going to give you 131 Japanese yen. You see, it's crazy. That rate is crazy, of course. But you'll be excited, of course, to say, 131 Japanese yen. I'm rich. But as you go into the street, a banana is going for 50 Japanese yen. You know, there are those, you know, Japan is the policy. There are some that's why they are inflating their currency like that. But after buying the Japanese yen, you would have participated in a forex trading. So that one is a physical forex trading. You're actually going to hand over American dollars in return for Japanese yen, or vice versa. That one is physical. But what we are going to do here, we are not going to be really giving physical money or buying physical money. That one will just be something in the air. But you actually deposit physical money, you actually withdraw physical money. But when you are buying and selling, it's not really involving physical money. You are just sitting at your computer, you look at the trading chart, you buy or you sell. That's why sometimes it's confusing, because if you think it's the physical, well, it's actually the same thing. But if you look it on the chart, it might be a little bit confusing, but we are going to clear that confusion today. Okay, before we go ahead with our training, do I still have people, or you are already out of the meeting? Oh.
We are still there.
Okay, good. So actually, in Zimbabwe, forex trading is just emerging. I think South Africa, it emerged around 10 to 15 years ago. Now it's quite strong in South Africa, but in Zimbabwe, it's not that strong. It's an emerging market. I think only the banks have been trading in the forex market, but now even individuals are starting to get the momentum. But this one is actually a very big market. This one is like a comparison. That one is the New York, that dragon-like thing is like the New York Stock Exchange. This is what this one is considered the biggest stock exchange, or the biggest market. They trade about 74 billion United States dollars a day. Of course, in Zimbabwe, we can't, we in terms of USD, maybe a day you just trade 1 million. This one trades 74 billion, the New York Stock Exchange. But compared to the Forex market is Canada. The Forex market actually trades around 4 to 5 trillion per day. So that's crazy. The market is quite big and the liquidity is quite high. People are involved in Forex trading more as compared to the people that buy and sell stock. That was just a comparison of whether it's a market that is emerging worldwide or something that is actually widely recognized. You see, forex trading has been in place since the 1800 centuries. You see, when we do candlesticks at some point in time, how they were developed, what they mean, and so forth. but it's quite an old profession. This is just a comparison. These are the major like markets, the New York Stock Exchange, the 18 billion, the London is just 7 billion, but now the forex trading is around 398, which is around 4 billion. That was, I think, 2017 statistics. Now it's actually more, it's around 5 billion. So was it about trading? What is forex trading? Simply, we are going to be trading money. As you see, you are going to deposit your $100. You trade. If you are successful, you are going to withdraw your $300. Successful, you are going to lose your $100. There are chances of losing all your money. Those chances are there, so you just have to be to pray for those things. But okay, what is traded? We trade these currencies, as you can see. You can trade United States dollars. You can trade euro. Euros. You can trade the Japanese yen. You can trade the British pound. You can trade the Switzerland franc. You can trade the Canadian dollar. You can trade the Australian dollar, the New Zealand dollar. So these are called like major currencies. I think there are 1, 2, 3, 4, 5, 6, 7 major currencies. These are highly liquid. For new beginners, for beginners in forex trading, you are recommended to actually trade these because they are highly liquid compared to the other currencies. Zimbabwean dollars, I don't think it's tradable. It's not actually tradable because we don't have our own retail forex brokers. Otherwise, if we had, we were going to be able to trade our Zimbabwean dollars. But South African rand, you can trade the South African rand. So you see as we go that all currency pairs or all currencies are abbreviated like this. For United States dollars, they just say USD. The first two, like two letters, they are representing the country name. Then the last letter is representing the currency name. So if it is like NZD, it's standing for New Zealand, the NZ, and then the D is standing for dollar. So that's New Zealand dollar. ZW, we know that is standing for Zimbabwe. Zimbabwe. Then L, I don't know why we have an L there, but it should be representing the name of our currency. Then ZA, that's South Africa, is representing by ZA, that's the country code. Then Rand, the R representing the Rand. USD, we all know that. That one, AUD is Australian dollar. Then GBP is Great Britain pound. So that's how you read these currencies. If you say GBP, you just say Great Britain pound. That's how you read your currencies. You also need to know that currencies are traded in pairs. Of course, let's say you want to trade USD. You would trade USD against another currency, maybe against South African rand or against Japanese yen, or if it is Zimbabwe, you're trading it against rands or Zimbabwean dollars. So you see that all currencies pairs are going to be written like this. So if we say euro slash USD, we are actually saying the euro versus the USD. So you can trade such a pair. That means the currency that appears first is the stronger current. So if you see something like that, it means the euro is stronger than the USD. If you see GPP versus JPY, it means that the Great Britain pound is mightier than the Japanese yen. If you see USD versus ZWL, it means the USD is more is stronger than the Zimbabwean dollar. Okay, so that is it. You see that when you are trading, on whatever platform, you see that your currencies are traded in pairs. You can't just trade US dollar as US dollar. It's impossible. You have to trade US dollar against another currency or our Zimbabwean dollars against another currency. So what is happening? These currencies they are like in a tug of war. Let's take, for instance, our Zimbabwean situation. We know that we have US dollar and the Zimbabwean dollar. So today maybe the rate is 1.3. They are fighting. If people they think if they are valuing the USD market or the United States market more than our Zimbabwean, of course the USD will have a higher value compared to the Zimbabwean currency. So you see that one USD is valued at 1.3. So let's say something good happens to Zimbabwe, which is rare. You see that that rate might fall to $1 US equals to 800. That's not normal in Zimbabwe. The rate always goes up. But in normal countries, you see that the rate goes up and down. So let's take, for instance, this chart. This chart is about USD and South African rand. As you can see here on the top here, you see that that's the pair there, the USD versus the South African rand. And this chart, if you look at the on the right, far right, that's the price there. So you are saying $1 is equal to 17.9 rands or 17.8 or 17.4. And this bottom here is the days and time. So currently it's actually saying the South African, the $1 is equal to 17.8 rand. So in Forex trading, like if you see this chart, if you your success is based on whether you're going, because there are two chances, the price can go up or can actually go down. And your success rate is based on, while you are here, can you actually predict where the price will go? That's all about Forex trading. If you can predict where this price will go, then you are going to place your trade appropriately. Others will say, this one, according to how this chart is moving, the price can actually go down. Or the other one can actually argue that, no, the price is going to go up. And how are we going to determine that? There are two things that we use. There is what we call the technical analysis. Just look at this chart and say, from my past experience, if I see this kind of movement, the price is going up. Or if I see this kind of movement, the price is going down. That one is called technical analysis. And we're going to learn that in the future. Then there's called fundamental analysis. Fundamental, maybe there's actually, these are based on news and, the fundamental news. You can say, okay, US dollar, there's something good that is happening in the market. There's some news that has been produced in the USD market. And you see that the USD is actually going to get strong because of that news. So those are the fundamentals. Those ones you actually have to read continuously so that you'll be up to date with what is happening. Okay, then you see, if we go back to the technical analysis, you see that every trader should have a strategy that they use. You don't just trade. Some they use indicators. You will learn about indicators in the future. Some they just do price action, which is the most celebrated. For myself, I use price action. We just share that price action movement in the future. For now, let's just introduce you to our Forex trading. Okay, do I still have people? Absa, are you there?
Hello?
Hello?
Okay, sorry.
Absa, I'm going to drop off. What did happen?
Yeah, my network is acting up. So when I came back, I didn't see anyone in the meeting, so I thought it had ended.
Okay. Ayan, are you there?
I'm still here. When do we were?
Okay. What Chisha Manzo last? I just want to check whether we are still together.
Okay, I dropped off when you were explaining those the graph.
Okay. Yeah, that's
Yes.
fine. Okay.
Can you hear me?
Yes, I can.
Okay. Well, okay, the last part that I got was about a trading strategy. That as a trader, you must have your own trading strategy, and you're explaining that you use price action, and there's another strategy for its fundamentals, where you have to pay attention to news releases every now and then.
All right. Yeah, that's correct. So we'll talk about the technical analysis and the fundamental analysis in the future if we are still living. But can you still see my slide? No.
No, I can't see your slide.
No, from my end.
No.
Okay. What about now?
Yeah.
So,
Yes.
something is coming up. Yes.
Okay. Can you see anything now?
No.
No.
Yeah, I can see it now.
On my side, I can see it. Don't know what else.
Romeo is network.
Yeah, I think it's coming. Something is loading. I think very soon I'll be seeing it.
Okay, that's fine. Okay. So we said after introducing you to Forex trading, you actually see that you all have to master a strategy that you're going to stick to that strategy. Your success is going to be determined by how you are going to master the strategy. Everyone should have their own trading strategy, and there are many strategies that you use. You can use indicators. You can use the others. They use what they call what is this? That stochastic whatever. There are many Bollinger Bands and moving averages, 20-day moving average. You understand that in the future. Today we're just introducing you to Forex trading. For me and most brokers, even the brokers that we're going to talk about in the coming slides, they use price action. It's very important. In the morning, You just draw your pivot points, and the price, normally the price will be moving in between those pivot lines. And it's very easy and straightforward, but very with a high successful rate. Okay, so we're going to talk to that about that in the future, but let's talk about these graphs. So you see that these are there are three types of charts that you can see that are there in the market. There is this what we call the candlestick chart. We're going to talk about the candlestick. There's actually a Bible, what they call the candlestick Bible. Just learning what these mean. They are conveying a lot of information, these candlesticks, and it's that information that people are going to interpret and say prices are going to go up or prices are going to go down. And we're going to talk about that in the future. And there's also this the line chart. So this one is the candlestick. There's also this line chart. This is not normal. This one is only used when you are drawing your support and resistance levels. We don't normally use the line chart because it doesn't give you a lot of information. Then this is what the bar chart. Bar chart also is almost like the candlestick, but it's also not normally used. So we are going to talk about that as we learn about how to use MT5 and so all that. But today we are just introducing you to Forex trading. Okay. So we said that currencies are traded in pairs. And we have what we call major pairs. These are the major pairs. Every major pair should have the USD either on the first citation or the second citation, like in this case, it's euro dollar pair. That means we said euro is stronger than the USD. That's why it's appearing on the first. What can I say? Then USD versus Japanese yen. It means that the USD is stronger than Japanese yen. So the way you read this pair, let's just zero this one because it always confuses people, but I don't expect you to be confused. So if we say USD slash Japanese yen, this one is called the dollar yen pair. What we are saying is $1 US is equal to so much of Japanese yen. So if we go back to our slide, this one was USD South African pair. So if you look at this chart, we are saying $1 US is equal to how much? We look at the far left and see this price here. That was the current price when I took this screenshot. So it's equivalent to $17.86. 86 rands. So this far left, you see that this one is the trading platform that you are going to be using. The far left will always be citing the price of the current that is listed on the left side of the pair. So in this case is the South African rand. So if let's say it was the euro versus the USD, that means on that far left, it will be the US dollar that is being quoted, that is being shown there. And if it is the USD versus the Canadian dollar, on the far left on our graph, it will be the Canadian dollar and so forth. So the stronger current will appear on the do I know my left and my right side? I think I'm confusing my left and right side. This is the far right, isn't it? Confirm this is the far right. So these prices on the far right will be representing the price of the pair that is on the right side of the currency that is on the right side of your pair. Like in this case, it will be the Canadian dollar. I'm sure you are not confused with this. Romeo, Absa, are you clear on this one?
Yes.
Yes, it's
I'm
quite
clear.
clear, sir. It's quite clear.
Good. I thought so, because you are accountants, you should know this. Okay, and we said all major pairs should have USD as one of the currencies there. As you can see here, these are our major currencies. As beginners, you should be trading these because they are highly liquid and quite predictable. So all of the major pair should have USD as one of the currencies there, because USD is the king currency in the world. Then we have what we call major cross currencies, or minor currency pairs. Is any other pair that is not including the US dollar. As you can see, we have the euro versus the Switzerland. Then we have the euro versus the United Kingdom pound, and so forth. These are just minor pairs.